And bring in Charles Bobrinskoy, Vice Chairman and Head of Investment Group at Ariel Investments, and Mike Hunstad, Head of Quantitative Strategies and Equity Research for Northern Trust Asset Management. Charles, I'll start with you because you've got an interesting mix of names. I mean, we're supposed to like pullbacks in stocks, right? I mean, you want to buy lower, I'm told, and then sell higher. You like a fertilizer company. You like the New York Knicks parent, which is, there's a joke in there somewhere. Tell us about some of these names. Are they all reopen type trades?
Well, we like Madison Square Garden Entertainment, which owns the real estate. It owns not the sports team. It owns the stadium in which people are going to start coming back in droves. And there's been nobody in that stadium, and there are going to be a lot of people in that stadium. They also own Radio City Music Hall. They own the Chicago Theater, and they're building the Sphere in Las Vegas. And all of those things are going to start having lots and lots of people because there is a lot of pent-up demand for in-person viewing. And so we think it's going to do very well. And the other thing, it's quality real estate, and quality real estate does very well in an inflationary environment. And we are about to see the inflationary environment that we really haven't seen for almost 40 years.
Wow. Mike, are you that, I don't know if it's bullish or bearish on the inflation call? And do you agree with Charles? I mean, there's a lot of value still in some of these, quote, reopened stocks.
Yeah, there's absolutely room to go here. You know, given the multiples where value are trading at currently, there is room to grow. And given the macroeconomic conditions, absolutely. When you look at these spreads between value and growth securities, still near all-time highs. And keep in mind that the earnings growth of value stocks actually better than growth stocks, especially as financials and energies come off of their cyclically depressed lows. That's going to give a big boost to the upside. Now, in contrast, some of the bigger tech names, just single-digit earnings growth into 2022. So absolutely still convicted that value will continue to do well in 2021.
Yeah, and then we talk about energy, Charles. Obviously, I'm kind of talking my book. I mean, that's the sector and segment that I cover. We know the boom in oil. We've shown, Dom showed the audience how the energy stocks have taken off. You still like a name like Apache. So you're obviously not scared off by the recent run in some of these, or all of these names.
Yeah, Apache has great assets. They're the exception to the rule. In general, we don't like commodity companies. We don't like businesses that have no sustainable competitive advantage. There's only one Madison Square Garden. There's a lot of people exploring and drilling oil. But Apache just has wonderful reserves here, and at $66 a barrel, which is where we are right now with WTI, this is a name that's going to do very well in the short term. I probably won't own it forever because the oil business is not a good business, but right now is a good time to own Apache.
You know, Mike, sometimes you get in a rut in this job, and I'm always asking people, what do they buy? And I should probably ask, what are you selling? Where are you raising cash to buy the stuff that you do like? What's already made all your clients all the money they're going to in the near term?
It's the high volatility, low quality securities that we think are going to be out of favor soon. There's been a massive junk rally since the vaccine announcement in November. Those stocks have had their day in the sun. Junk rallies, they tend to be very severe, but they tend to also be very short. As a result of that, we're selling down the high volatility, low quality, going into those high value stocks that have a higher quality orientation. From a macroeconomic perspective, from a fundamental perspective, we feel these securities are going to outperform in the future.
So without mentioning names, what you're saying is companies with really bad credit ratings and horrible balance sheets that had big rallies because everybody just needed something to buy. Is that a fair, broad brush, Mike?
Yeah. Low profitability, bad cash flow, bad balance sheets, lots of leverage on the balance sheets as well. Those are the securities. Again, they've done well since the vaccine announcement. But we're already seeing some of that start to come off.
Shepard Smith here. Thanks for watching CNBC on YouTube.